Yeah, so it's time for our next discussion round. And yeah, it's already one of the world's fastest growing fintech market, Africa. And while Africa offers tremendous opportunities, of course, the continent also is pretty fragmented and hard to navigate. So I'm excited about the following discussion about emerging fintech markets with the investor at the ventures platform fund Dolapo Morgan, the CEO of Sanfi, Rotimi Thomas, and the co-founder and CEO of Yahazi, Sven Grospitsch. Please come to the stage. Hi guys, just choose your seat. Perfect. Then Sven, come to the right hand. Thank you all for being here. And before we start with our discussion, kindly reminder, when you have a question for our panelists as well, just scan the QR code and ask questions through our Slido app, or raise your hand and then someone will come to you with a microphone. So, keeping this in mind, this might sound weird at first, but please hear me out. The city Berlin and the continent Africa have something scalable in common when it comes to fintech. The majority of our unicorns are fintech businesses, and yeah, let's focus on the fintechs in Africa. Dolapo, why do you think that is, that many unicorns are fintech?
Thanks for the question. I think the reason why there are lots of fintech companies in Africa is because of the vast underserved segment of financial services in Africa. So about 90% of transactions are still done with cash, despite the fact that 80% have phones, right? And about 40% have smartphones. And so because there's such a huge opportunity of people that are underserved, is why a lot of people are targeting the fintech sector to serve those underbanked customers. Yeah.
What do you think?
Yeah, I would say the same thing. I think Sven was just telling me that by 2050 or something, I think a third of the world's population or more is going to be in Africa. And we need a ton of infrastructure to actually be able to help make that transition, especially in the clean energy and sustainability space. And when you think about that, if it's 90% of transactions are by cash in lower middle income countries or poor countries, then you really do need a financial sector that's able to help lead that transition and make inaccessible technologies and services accessible to the masses. So that's why fintech is revolutionary over there. It's a necessity.
Yeah, okay. Sven, what is your take on that?
Yeah, I mean, I think some really great points were made. And not only if you focus on Africa, there's a big need, but also if you look at the diaspora and all that money that is in the diaspora and has to come back home, that infrastructure isn't built yet, and also remittances on the continent itself. There are just a lot of different use cases where currently there's not enough fintech on the continent, but a huge opportunity in terms of customers that you can serve. So I think that's also been like one of the major driving factors.
Yeah, definitely. Let's dive deeper into the innovation landscape and the market possibilities. Dolapo, you provide capital and strategic guidance for founders who want to build scalable businesses. So what are the biggest challenges for rising fintechs right now?
I think one of the first things which Rotimi alluded to is the infrastructure. So for fintech to work, we need internet. We need electricity because people need to charge their mobile phones. People need to connect to data services. So I think the limited infrastructure still remains a bit of a challenge. Although we see a lot of telcos partnering with the fintech providers to make this possible, and the use of just regular mobile phones, not necessarily smartphones or feature phones, to provide financial services. So that kind of is a way that a lot of the fintech players are mitigating the lack of infrastructure or the limited infrastructure that exists today. I think the other second challenge is just the regulatory landscape, because the continent is used to a lot of traditional banks and traditional players. Regulation comes up every day. So in a week, there can be a new regulation that comes out. that
Right.
changes kind of the market dynamics for a lot of the fintech players. And so it's important for, I guess, the government to also partner with this new incumbents to serve them. I think the last thing is around the currency. So there's a lot of fluctuation
Right.
and volatility in some of the core African markets like Nigeria and Kenya and Egypt. And so like a VC investor like myself, we invest in foreign currency, and so we value the business in foreign currency. But because of the volatility of this currency, it can become challenging to invest in those companies and to determine the true value of the currency and the true value of the business. And so I think the more stability there is from a currency angle, I think the more influx of funding as well would occur. Yeah.
Talking about regulatory environment a little more. Oh, would you like to react? It seems like.
Oh, no.
Okay, good.
I agree.
So, because then talking about regulatory environment, Sven, do you see a risk that new regulation, because the environment is still evolving, could stifle innovation and create also a headwind for startups to cooperate?
Probably there's truth in both of the perspectives. Right now, if we're looking at Kenya, for instance, there's a lot of regulation in terms of digital lenders and them being regulated, which also has a ripple effect on the other informal credit providers in the country. So they have to become registered now as well and be compliant. That obviously makes it more difficult for those organizations to deploy capital in the market. But on the other hand, there has to be guidelines and rules under which fintech is operating. But for now, I was talking to Rotimi about this before. We feel more that the regulators actually make our life a bit more harder, and it's a headwind. At least that's what it feels like from an operator and founder perspective.
Would you like to react on that? It seems like you were.
Yes, no, I agree with him, and I think as investors, one thing we try and do is also collaborate with the regulators as well. So recently, in about the last 2 years, there was the Nigerian Startup Act. That was because of a group of operators and a group of investors decided to go to the government to collaborate with the Ministry of ICT to develop this act to create a more enabling environment. So I think the more collective action there can be from both investors, operators, government entities, the better it would be for the ecosystem. Yeah.
Okay, but what might this collaboration look like? Can you give us an example?
It could look like, for example, recently, a lot of our founders within our portfolio use AWS credits for their cloud storage. And so a group of investors came together with a group of founders, and we reached out to find out how we could reduce the pricing to make it more favorable because our founders are paying in local currency. So the collaboration doesn't have to be even just collaborating to influence the government, but even like private institutions like an Amazon Web Services. Yeah.
Let's dig deeper into an example of how it felt like founding a new business. Rotimi, founding an energy fintech platform, what was the process like for you?
Well, I think Sven and I were talking about this as well. So I used to work for Siemens.
Yeah.
Actually, I lived in Nuremberg, so I have a lot of love for Germany. Ideal life. And it was always nagging in the back of my mind that everywhere I've lived, Canada, US, Germany, Holland, so on and so forth, all the people have the power to be the best version of themselves. There's electricity all over the place here. So much so that you have heated bathroom floors when you go into the bathroom here. And in my country of origin, we have 200 million people in Nigeria, as an example, and we have perhaps as much power generation available as a small city in Germany. That doesn't make sense. In a continent and in a country where the population is going to be one of the largest in the world, why are we solving a problem still that's a 100-year-old problem? And so I joined Siemens and did that whole thing and eventually got back to Nigeria and was able to try and build a grid-scale electrification initiative. But I saw that crumble as well because of the lack of coordination across regulators, industry, last mile consumers and so on and so forth. So I accepted that decentralized solutions, while not optimal, is what works in a place like Nigeria. But you have to build a lot of the rails, the financial technology solutions, the payment systems, the utility services, the IoT-enabled technology that enables you to deliver decentralized solutions to customers at the last mile. So it's very difficult making that transition from a big Siemens to working in very difficult terrain with customers that are not yet ready to accept the solutions that you have. So you have to change their mindset. And that's been one of the most difficult things. But the transition is underway. Most consumers in Nigeria run these camping generators that you might use out here to go camping. Yeah. Imagine 20 million of those powering a nation of 200 million people. It's unfathomable. So this problem that we're addressing is very critical. And so for me, it keeps me going because I know that if we succeed, we can change an entire nation, if not a continent. So it's worthwhile for me to do that.
So you have a concept for the future. I think this is also a main driver in all this.
Very clear vision.
Definitely. Yeah. Sven, you deal with the credit worthiness of small and middle-sized companies and enterprises. Where do you certainly see the biggest chances for fintech businesses?
I mean, I think there's the SMEs in general and the formal ones is a customer segment that's heavily underserved by the banks. Mm-hmm. Banks don't know how to really credit score them, how to understand them. They don't understand the needs of that business, and the products they're providing aren't favorable to those SMEs and doesn't enable them to grow. So what we did as Jahazi, we were set out to help SMEs get that data visibility and bring that to the lender and enable these lenders to provide credit that actually makes sense. So where this is super interesting, where there's a lot of green space at the moment, is if you look at value chains. And you go to the beginning of the value chain, take one of the biggest anchors in that value chain, and that anchor has a lot of relationships to smaller SMEs down the value chain. And they have the data on it, and we can take that data, provide that visibility, and build bespoke credit products that lenders can then jump in and deploy capital to those anchors and ultimately to the SMEs. So that's one example where there's huge opportunity and the chance to actually do something about the big credit funding gap for SMEs on the continent.
Mm-hmm. Talking about consumer behavior again, also, as you already mentioned, research shows that Africa has over 90% mobile penetration and 88% internet penetration. So for context, Sub-Saharan Africa has more mobile users than the United States and the United Kingdom combined. I found this very interesting when I found these facts. So a question for you all, how do you assess this market potential for mobile services, especially in comparison to Europe, where it's still lower? Yeah. Maybe.
Yeah, I'll jump in. I mean, mobile connectivity, it is that deep in places, in many different African countries. I mean, let's remember, we're talking about one of the most populous continents in the world. And when we compare it to these other markets, those markets went through the landline phone system, and that was around for a very long time. Many African countries specifically have gone through a leapfrogging where consumers have never come into contact with landlines. I remember using my Siemens landline when I was a kid, but not many people got access to that because you would queue up and so on and so forth. And so by necessity, the penetration is that deep. And that penetration then enables us to bring all of these other services that we're bringing. So the mobile phone is the method of service delivery, whether you're an energy company like Sunfi that is analyzing consumer credit and data and creating credit scores in order to qualify consumers for solar, and then getting lenders to come and finance that. The method of communication is through the mobile phone. If I'm going to shut you down and reactivate you, you're going to interact with me most likely through your mobile phone. Same thing, I'm sure, for Sven and every other business that's delivering financial technology and services. It's all through the mobile phone penetration. So it's very critical for the scaling up of the ecosystem.
Do you agree?
Yeah, I think I wanted to just make another point around, although you compare the size of Africa to the US and the UK, when we think about the funding, right, I think as at Q1 this year, Africa as a whole received 1% of total venture funding globally. And I think about the US received maybe 100 times more than like Africa as a whole. So, which is why I think the need for that financial services being provided to a lot of our startups is really, really critical because more funding is required to serve these customers. And so that just gives a picture of what that potential could look like if there was more funding, more startups, being accelerated as well on the continent to serve those mobile phone users.
Then let's look more on the local perspectives. Sven, I found actually an interesting quote on the Forbes magazine recently. I would like to quote it. Fintech across Africa isn't about making something faster or cheaper, but rather about providing real value to customers. So what is your opinion on that regarding local solutions for fintech?
No, I think that's absolutely correct. So when you said the smartphone penetration is high, you have to have some sort of use case for the consumer in order to use your service. A lot of digital banks or credit providers, digital banks have started out as credit providers for consumer loans, where you can just sign up, they credit score you based on your mobile phone usage, who you text, what contacts you have, SMS coming through and categorizing them. And that was the hook for them to get customers to grow and build a business. And now they're turning into challenger banks, right? So customers wouldn't have signed up just to have a bank account, because what's the reason for having that bank account, right? And it's also the same when, for Kenya, for instance, when you look at what mobile money has done. If, in comparison to, I think, Nigeria, but also other countries, the penetration is extremely high, and it's de facto sort of a bank account for the users, right? So there has to be a hook, there has to be some use case, there has to be some need that has to be met in order to get customers to sign up for a bank, for instance.
Yeah, definitely. Speaking of numbers, let's go on with that. Dolapo, I found in 23 there were almost 700 fintech firms operating across the continent, but yet the pace of new launches is slowing down, indicating that the ecosystem has entered a kind of new stage, that of consolidation. What do you think?
Yeah, no, I think globally there has been like a funding kind of slowdown, but I think we feel it a lot more as well in Africa just because of, like I mentioned, the currency situation has been quite significant. And when you think about the 4 largest markets in Africa, Nigeria, Kenya, South Africa, Egypt, 3 of the 4 have gone through like a year of difficulty in terms of that currency. And so that has influenced that slowdown. But I don't think it's necessarily a bad thing. I think it's more of a correction because we saw there was a lot of funding being thrown into Africa between like 2019 to 2021. Now we see that to get more money in Africa, your business really needs to be a good business. Like the unit economics need to make a lot of sense. And so I think the type of businesses that would emerge in the next 2 years will be truly strong businesses with strong economics, strong value propositions as well.
And what would you say? How attractive are African fintech businesses at the moment for also international investors?
Yeah. I think they still remain a big opportunity, despite the likes of Paystack and MoneyPoint. There's still a huge proportion of the population that's still unbanked and unserved. So although Paystack might be dealing with payments, There needs to be people that are providing, digital banking services and other services. So I think the opportunity still remains, especially because we have such a young population as well, that are always on their phones anyway. So it's just about serving them the right way. So there's still a lot of work to be done in that.
Yeah, please.
Yeah, I wanted to piggyback on something both Dolapo and Sven are talking about. And I've looked in the room and seen a lot of very cool financial technology companies. Quite frankly, I'm inspired by a lot of these companies.
That's good.
When we look at financial technology in places like Nigeria, Kenya, and so on and so forth, you might not expect to see on this stage an energy financial technology company. What is an energy financial technology company? The fact that we need to deliver a ton of infrastructure, whether it's for internet or for energy access, because we're dealing with old problems and we're trying to solve it using new solutions. And so we first have to create that data layer that then enables us to embed financial services in traditional businesses. And so in addition to all the open banking type technologies and so on and so forth, you're going to see a lot of hybrid financial technology companies in Africa because we are addressing hardware problems using software and financial technology solutions to make those things accessible to people that traditionally would not be able to access it as well.
Let's talk more about actually your business opportunities as well. In general, African businesses are also expanding internationally, and Flutterwave, for instance, just announced plans to scale to India.
Yeah.
But of course, solar and the potential of using solar energy from Africa, also in Europe, green energy is a huge topic.
Yeah.
In Germany as well, of course. So how do you assess the future potential of cooperations, maybe between Africa and European initiatives?
Yeah, so what we're doing at Sunfi is we're building, I would say, maybe to just bring it home, something similar to the NPAL of Germany. We're building that for Nigeria. And as we scale that in Nigeria, we're looking to scale that service across different African countries. Nigeria is the largest opportunity in the world to transition people to solar. And that's because, long story, the grid doesn't work. It's not going to work properly for hundreds of years. Just imagine the most populous African nation running on diesel generators and petrol generators. It makes no sense. And so there's tons of German technology that I'm a huge fan of. Everything from the types of solar systems that are designed here to the smart home. So that's the next asset class that we look at, because if I can power your building, the next thing I start to use that data for is to anticipate the new appliances that you need in that building. Whether you're a business or you're a residential customer, because energy prices are taking off, be it the grid price, the fuel price, or whatever the case may be, I need to help you both power your appliances more efficiently, but also to use that energy more efficiently. Mm-hmm. And then I can think about, okay, well, how are you delivering services to your consumers? So electric mobility becomes a thing. Because the fuel prices are taking off, that gives me an opportunity as well. So I think Nigeria, South Africa, Egypt, countries like that present one of the biggest low-carbon energy transition opportunities in the world. And Germany has tons of capital, but it also has tons of ingenuity. And I do think we need to create a better corridor or bridge between those two markets to make the transition possible.
Yeah, definitely. I agree. Dolapo, when we talk about African fintech, we are actually mainly talking about countries like Nigeria, South Africa, Kenya, and Egypt. You already mentioned those. But you are based in Nigeria, for example, Rotimi, you as well, Sven in Kenya. So, but what market potential do you see beyond in the future?
So do you mean in other African
countries? In other countries,
okay,
right.
Yeah. So we recently actually did 2 deals in Senegal, and it presents an exciting opportunity because although the market is a lot smaller, I think their population is like a city in Lagos State. Players are able to go very deep in those segments, right? So in Nigeria, to win 5% of the market, you can win. But in a country like Senegal, you would need to to get probably 80% of the market like Wave did. But we believe that because it's such a nascent market, they're just starting off their industry, being able to back the early players in the different categories presents an exciting opportunity for us. The second thing is also their currency is actually quite strong. Their currency is pegged to the euro. And so you don't have to deal with that currency risk that you might have to deal with in other markets. So countries like Senegal, Ivory Coast, so that's like the Francophone region, even Morocco in North Africa also presents an exciting opportunity. Yeah.
Yeah, thank you. And we just got a question from our audience I would love to bring into this discussion. Is the regulatory landscape in Africa harmonized over most countries or heavily fragmented? Ooh, I think this is a question for you.
I don't know if I'm the right person to answer this question, but from my experience, and probably you guys can chip in as well.
Yeah, you can.
It's not, right? Every country has their own regulatory environment and frameworks. It's 54 countries. You probably, from like a venture perspective, have to nail 3-4 of those markets in order to build a really, really big company. And then not even the regulatory environment, but also the customer needs are slightly different. The distribution is different. So you can't just replicate what you're doing and scale it across the continent. That's really hard to do.
Any other takes on that?
Yeah, no, exact same take. Even within countries, there are different states that might even have different laws and regulations. So it's definitely super fragmented. Although there's some, companies that are coming together to create some laws together or, align on what the policy would be. But I think we're still in the early stages of that in Africa. Yeah.
All right.
I think there is just a different take. The Africa Free Trade kind of agreement and initiative is creating a pathway for some level of commercial harmonization. So it's not necessarily regulatory from a perspective of how to do business, but perhaps the methodologies that you use for transacting. That's becoming a little bit more streamlined. It's still taking a lot of time. But for example, a business can sit in Nigeria and potentially launch across different markets. And there are startups that have risen to make regulatory and country penetration strategies as a service possible to you so that you don't have to learn a country from ground up. So I think every problem that you perceive in these African markets, people are actually building things around it, but it definitely is a bit fragmented from a regulation perspective.
Thank you all so much for your insights and this interesting discussion. This is your applause.
Thank you.
Enjoy our festival, right?
Thanks.
All right.